Welcome to TradeTheMBA.com. This is John. This report is for the 28th. Going into the end of the week, looks like the Supreme Court nominee will get his confirmation. I mentioned they'll vote on that. That could add a little extra to the market action, but the reality is we've been supporting on the 76 line within general weakness. We've started to see a little turnaround in the short-term buyers, and mid-term buyers still been above the red, even though both have been somewhat declining. Despite this, price is really relatively hung up very nicely, given the general weakness, and that resets everything, which, given the long run, and so this is where you go back to the gold rising. It's a good way to view it in this tense, because you've got this long trend that's been building, and while everyone thinks it's extremely overbought, we can see that it hasn't moved to an oversold where we would get like to the negative, 13.5 on the DOC here, but with the red at the 7 range, moving up to 0, back into the 7, it's easing off a little bit at a time, and not quite as extreme. Here you can see on the NASDAQ a little bit different, with the little P's there on the pivots, because what that's showing is that you're getting continually rising red DOC pivots, which is an indication that you still have rising strength from overall long-term buyers, despite what you hear about all the insiders selling, yada, yada, yada. The sky is falling, the end of the world. I think the end of the world was back at 1,300, 1,500, 1,800, 2,000, 22, 26. They weren't even talking about getting towards 29, let alone as my discussion when we were at, 1,200 or so, talking about 3,000, and we're almost there. So this is the post-war dividend. It's pretty clear in the way it's laid out. It's happened after every major conflict. But that's a whole different story, so we're going to get into that. The euro's fake pump has been reduced as the Italians continue to throw a monkey wrench in the new world order of globalism there, and it's really causing a pain in the butt for the European Union. As more fractures build, it becomes tougher and tougher, particularly with, it's the same situation the Fed has with how much easing they're going to do. That the bonds, they're still talking about another rate hike even in December. This is going to quadruple the debt, well, at least what the deficit is going to be, because without the interest rate rises, the deficit would have been under control, but this is going to massively increase the amount of interest paid in that, so that's going to be a huge drain. We'll see if the economic numbers justify them moving towards the end of the year and continuing to push rates higher. It is interesting how we went all those years without a single rate hike. Now you have 4 in a single year as soon as Donald Trump gets elected. Coincidence? Maybe not. Well, it doesn't really matter. Oil still up at the peaks, which is interesting given that you have such supply capabilities, the U.S. now being the leading producer, but the problem really gets down to production capacity as far as final product, and that's limited because of the environmental regulations and the inability to build new facilities. So that in and of itself creates a bottleneck. And gold, we didn't expect anything from gold. In fact, it's been like pathetically weak. I mean, this was the biggest trend run it's had in a while, which has been pretty much sideways. And not unsuspecting, we would have expected it to start to cave earlier. It just took a while for the momentum to build, and it finally fell of its own weight. So intraday was kind of fun. We ended up with, what used to be the white candle here, which is the orange, indicating that we would come to the lows. It did that pretty quick. There really wasn't anything despite any of the moves, and it's because no reset of the steel. You needed to see a move where that came down back below the red to reinitiate it. And as soon as it did, that became the powerful opportunity from then on. Every buy signal was a solid one. And boy, as soon as they came in, the positive extremes all the way across, that left the exact same 29.15 line from before as a reset. Interesting how they keep reusing those same general numbers. Actually, what's the low? It's a little higher than that. It was actually 18 and a quarter, so the low was 15 and 3/4. So yeah, just a couple of ticks. So pretty good, right within that range. And then you can see we came higher. The problem was we never ended up with the steel moving above until it was right about this one. That was the first opportunity. Only problem was red couldn't get below, orange wasn't above. And then that left it to this one, which is a little bit tougher, where you had the meaning right here. The very next bar, boom, it rejects. That one is actually a decent one to take. The further escalation, when it continues, and cyan is clearly continuing its trajectory over zero. Here it was just like minus 0.7, 0.07 I should say, and then moves to 129. So whether it was the previous bar, this one, both still took heat, and then the full DOC spread, which came right after, if you're really wanting to go super conservative, which is also a break of the ABM, and that led to, boom, the move all the way down. 29.17, right in the middle range of this bar, more than 80% of our expected total, so fits right within that guideline, though I would like to see it actually touch there. As you can see right now, interestingly, forming gold candle, currently below the 50, and actually the most reasonable short. We haven't had one since, because you notice the orange has not popped up above any of these and formed a significant spread. I mean, you really want to see that nice, violent break apart of the two, particularly then also the green breakdown. So while this is soft, we might get a little bit more action. It wouldn't take much of a break of the lows to fill in that 29.15 number completely. So that's where we are generally. Let's see if we put up the other 5K that has the Diocon paint. You can see coming off of P2, and now this would be a P3. So it's just a matter of developing bisignals that would justify an entry point on those. Because what you're showing is added momentum, but you do still have to have the signals. And every time that orange crosses back above, it kills it and pretty much negates it going forward. But you don't have a strong sell in the sense of the orange shooting above steel and steel coming down to form a snake. This would be the first one since, well, geez, the bull snake that took place back over here, which corresponded to right about there. The problem was you didn't get a buy signal until all the way back over here, which perfect, because that's exactly where you would expect to be off the lows. So it's really clean action from the indicators there to really depict it all quite nicely. I will continue to put anything up that's relevant. This was all pretty much boilerplate standard setups, nothing unique. This will be a little more interesting here with the gold developing right now. So we'll keep an eye on that as pre-market develops. As always, trade well. I will be sending out indicators over the weekend, and you can be ready for that. And I would think a pretty exciting October leading into the election. We already saw how crazy things are getting with just a Supreme Court nomination. It's going to get really wild when they recess for campaigning. It's going to be wild. As always, trade well. We'll talk to you later.